Okay, everyone, welcome back to another weekly watch list video. We're going to jump right into it today. I have a very busy day ahead, so I wanted to jump on here early, try to get the video out for you guys as early as possible so we can prepare for the week ahead. This is going to be a huge week for earnings. I think over 45% of all the S&P 500 stocks have their earnings reports this coming week. So if you thought last week was volatile, well, you have half of the entire S&P 500 reporting their earnings. So buckle up is all I have to say. But if you're trading, be aware of when the earnings are. I'm not somebody that likes to sit through earnings. So if I was going to trade something, it would either be to the upside or the downside the next day after earnings come out, or getting out before earnings reports. I don't like to hold. That's just totally gambling in my mind. So over 45% of the major stocks are reporting this week. So, just huge amount going on. What we don't have going on, which I'm sure a lot of you are going to be very, very happy about, is there's no Fed. There's no Fed speaking this week. There's no Fed anything. So that's really, really good. A very light week as far as the economic calendar goes without the Fed. We saw once Powell started speaking, the computer algorithms just totally hit the sell button, and we saw tremendous selling for 2 straight days after he spoke. So we don't have that this week. What we do have are the earnings. So that's going to add to the other end of it. Just be aware of all that. And then, coming into the market and basically our compass, right? So hang on one second. Just want to get this into a better picture for you. Looking at the SPY, and, very obvious, okay, to see how bearish that looks. Okay, we consolidated here for about 2 weeks, and then broke to the downside. And we didn't just break to the downside on low volume. We broke to the downside on increasing volume up to a high here that we haven't seen for about 5 or 6 weeks as far as the volume went. So that is a huge drop, broke a key level. Once that happens, the market just totally sold off. Now, where do we go from here? Okay. You have 420, the 420 to 415 area. That's a possible bounce, but we've hit this spot so many times that I don't really like coming back into this. We may see a bounce that may happen, and I'm, no crystal ball here, but it's not just going to go straight down forever. There will be a technical bounce at some point. If we see a little bounce and then have, a couple bear flags set up for the next leg down, then you're looking at maybe a 15% correction area. We've already hit 12% on the year at the lows, at the closing lows here to the closing high here. It was about 12%. So if we go down to this area here, that would be a technical area of about 15%. Once you start going lower than that, and you get to 20%, that's a bear market. Okay, we don't want to see that happen. Now, with earnings coming up this week, anything's possible. But that's the SPY. This is what we're looking at right now. It broke all key levels. The next support is obviously going to be around this area. So keep an eye on it right around there. Looking at the Qs. The Qs looks, much worse. The sell-offs have been really just brutal with this one. It's got a double top here at 370, and then, could not handle these moving averages. And this is a very nasty looking 20 EMA. This thing just took a sharp turn down. So we'll see it crossed over here, not looking good again with the volume profile. We have increasing red volume, also not good. The RSI heading straight down. Now, at some point, it will get oversold. You may see a technical bounce at some point. This is the 20% area here of where it corrected. So the Qs came down, tech came down way more than the industrials, the SPY, some of those stocks. The Qs have really taken it on the chin. But if we look at the weekly chart here, if we do break down, and if we break the 20% correction area, the next level here, which is a possibility, is 300. If we don't see a bounce with tech earnings. If tech earnings show amazing earnings, keep an eye on how the market reacts to that. If it sells off these great earnings, then you just have to expect, we're coming back down to the 300 area. We're really close here. We're at support, technical support, but we've already hit this once, twice, three. You hit something too many times, then you have a descending triangle set up and a break down to the downside. We've seen that pattern on so many different stocks lately. It's been just nothing but selling. So 300 would be the next level on the Qs, but we're going to see what the earnings look like as far as that goes. The Russell, just still trading in this area. It did this all of last year, and now it's doing the same thing. So I just want to go back and just show you guys this weekly chart here on the SPY, because I think it's important to look at these really big time frames. The SPY had a candle here on the weekly that kind of was suggesting the possibility of a move down was potentially going to happen. With this type of candlestick on a weekly chart, after a run up and then a pullback to end the week, we saw the market just open up and sell off for the following 3 weeks. So, keep an eye on these larger time frames. The only thing I will say is when we're looking at this on the weekly, it's very rare, other than this March, obviously coronavirus, it's very rare to get, more than 1, 2, 3, 4, 5 weeks of down, really bad selling. I mean, you saw something here a little bit. It popped, came back, retested that low. But as far as the weekly goes, that 4 weeks or so, even when it corrected here, 4 weeks, we saw a bounce. So, I am expecting some kind of bounce to be possible when it touches down here. Now, what it does from there is anybody's guess. And, earnings are going to have something to say about that. But just keep an eye on it, larger time frames, and then we dial down into the, shorter time frames. We can see a better picture here, on the daily. And, where it's rejecting the 200 SMA on the daily chart for the SPY. The Qs, like I showed you, was rejecting the 50 and the 20 on the daily chart. Okay, so when I'm looking at the overall markets and where I'm trying to see where it's going to go, I'm always on those big time frames. I'm not looking at the 1 minute when I'm doing stuff like this. When I'm trading, yes, I'm looking at the 5 minute, the 15, the 1, for entries, if it's fitting where our patterns are showing. So that's it. Like I said, quiet week this week, no Fed. A couple of charts that I want to show you guys that totally broke down was Google. And with these breakdowns, that's where you're going to start to see the whole market come down. When these are breaking these key levels, not good for the market. And we saw that with NVIDIA breaking 208.64. This is something that we shared as a trade idea in our, hang on one second. This is something we shared in our Discord last weekly watch list. If we break key support at 208, we should be taking puts, okay? We broke down just like the whole market broke down, but a lot of these stocks were at support, but hit so many different times. So the odds of a breakdown were just greater at that point. So that was that one. A couple of other ones where we called these during the weekly watch list, more of these same patterns that we're seeing, these descending triangles, breaking the flat bottom like that, like Chewy. Broke down here, had a very nice call in the weekly watch list on this one as well. See right here. Okay. Descending triangle, like I said, if 36 breaks, puts can be taken. And that was made, when price was up here, heading down towards that bottom end of the channel. But when you're in these descending channels and you're making lower highs along the way, the odds of them breaking down are pretty good. So these were all good trade ideas. Another one from last week was Apple. Now, Apple, whoops, did it wrong. So Apple, we had said right here. So this is where the 200 is. At this point, we had shared in our Discord, like I said, another trade idea with this huge bearish engulfing candle that we had seen on the daily chart has me thinking price can retest the 200 moving average. Okay, earnings in 2 weeks, because we never want to forget when there's something key going on. But this one did exactly that. So a lot of these calls from last week really worked out. A lot of these stocks, like I said, they were at key support. So you had, this one was something from 2 weeks ago, broke out of its triangle to the downside. What else? Facebook, another one. This one broke down. It's hitting lows of the year. It could not hold this level. So what was resistance came down to support, broke through resistance, came back, bounced off of previous resistance, now support, and then broke down. And now it's making its low for the year at 183. It has earnings coming up. So like I said, a lot of these can be changing with the earnings reports, but it's really good to know when they're coming out. And we have Starbucks, another one, breaking out and making its low. So you guys get the point. A lot of these have just totally broken down. This one is just a picture perfect view of it. And this is a picture perfect view of the overall market. Exactly what happened in the SPY right here. So when those big companies that make up so much of the market, when they break down, the market's coming down with it. And, so that's just something to always be aware of when you're trading. What are the big stocks doing? We could look at Tesla. Tesla had a big gap up on earnings and then sold right back into its consolidation area. To me, that's extremely bearish when a move cannot hold up, when something's consolidating and breaking out and then pulling back, to me, this is going to keep going down at this point. So Tesla, I'm definitely bearish on. It already had its earnings. So that's that. Like I said, though, we have to watch the rest of the market. Over 45% of the market's going to be reporting this week. So keep an eye on how the market trades these earnings reports. Very important. And if you are trading, take just a couple of trades. Don't try to overtrade in a market like this, especially with the VIX that just went straight up. We really need to be managing our risk right now. Okay. So that's it for me. Hit the thumbs up for the video, and I will see you back on the next one. Take care, guys.